Team, welcome out to the BluSky TV. This is Coach Matt for the Technical Lab. We're going to be talking about a few different things here today, but first and foremost, welcome out to the lab. Glad everybody's here. We're obviously going to be talking about some technical concepts and basically take a look at the breakdown of the market itself, looking at crude oil on a potential breakout here. But first, just wanted to welcome everybody out and kind of talk a little bit about the landscape in the technical areas of the market, take a journey around the market right now, because I kind of like a little bit of the commodity landscape, a little bit more than what we're seeing in the ES and the NQ very quickly. So I just kind of want to explain a little bit of what I'm seeing across the board in the market right now, just as we kind of get into the next couple hours, because you're going to be spending a little bit of time with me today, both in the lab here and then as we get into Power Hour here in just a second. First and foremost, let's take a look at the ES and the NQ and kind of just look at the landscape from an overall market index perspective. And when you're looking at the ES here today, I was talking with a bunch of traders earlier in the session when we were kind of in the middle of the range here. And now as you're kind of testing the low point here, you're really kind of getting into one of those areas of the market that has a tremendous amount of chop here. And so you look at the market yesterday, kind of this is the levels we were dealing with yesterday on that trade we were in yesterday during Power Hour. If you recall, we were looking at the downward pressure in price, and then we had that beautiful bearish retracement back up into the highs here before you saw that sell off back down into the lows. And you're kind of battling those lows right now in the marketplace. And so this is where you start to see a little bit of battles in the market. The bulls should step up to defend the area. You're seeing some patterns develop right here as well. And when I'm looking at the market here, I do have a little bit of a bias to the downside here, team. Just looking at this as the market is kind of fading here underneath VWAP, developing into a little bit of a base right above the 74.10 level. And you see those double, triple wicks there. Definitely looking at that test there at against that 74.10 level. That's something to keep an eye on as we do navigate. Now for the bulls, you're probably looking at the 74.30 level, seeing if you can get that back up to VWAP. I don't love it. I do like the downside mechanics here. I think you open it up a little bit down to the 73.92 level. Let me get a line drawn right there as well. You go down to the 73.92, 93 level. There's a little bit of a pocket right there that is fairly interesting. And then when you come out to the longer time frames here, team, you'll start to notice some stuff. As we start to work underneath these levels, you really don't see anything to the left of the chart here. You come out to a 4-hour time frame, 2-hour time frame. As you start getting into these levels, you start opening up down all the way down to the 73.10 level. And so I do like the downside mechanics a little bit more than topside mechanics here, as we do kind of get into the lab here and we get into Power Hour here in just a little bit of time here. And again, it's one of those situations where you expect a big time battle here. If this battle loses, you see a pretty quick journey here. And then underneath that level is where you really start to open up, where you get a little bit of what we call open air. And that's kind of the first technical concept I want to talk about here, is that concept of open air. And then we'll get into the NASDAQ and look at the NASDAQ read here in a second. But I do want to talk on the commodity side of the equation as well. And so when you're this conversation, I'm definitely going to talk about Micron, Ace. I just want to get my technical thoughts out of the way first. I want to take a look at the ES, the NQ, GC, and NCL, because I do feel like there's better edges on the commodities side, especially for the bulls here today. I feel like there's a little bit better areas on the commodity side of the equation for the bulls. I do favor the bears on the equity side of the equation. And so, but I am going to get into Micron, because I think that is an extremely important economic earnings report here today. There was also news out of Qualcomm today on the AI trade. And then obviously we had some economic data that came out today that I want to go through as well to talk about kind of what's happening on the United States dollar, which is giving the commodity landscape a little bit of an edge here. And so first technicals, then environment, earnings, economics, and kind of overall market structure is kind of my plan. And obviously, team, you have anything you want me to take a look at during the lab? This is as much for you as it is for me. And so when you're looking at the equities, you're kind of battling this low price right now. Again, I just don't love the top side because it doesn't open up to give you that concept of open air. And when you are talking about open air is a philosophy where you look to the left of the chart, and is there any major pivots that scare you from a from a technical point of view? For example, if you break out of this level right here at the 33 level, you have to target VWAP at 44. I wouldn't exactly call this open air when you break out of 74.30 and you can only go 13 points up to 43 before you start getting into some major resistance levels. That's not open air. And when you have a situation where you do not have open air, as a day trader, you got to be a little bit more aggressive in your triggers. You have to anticipate confirmation, in my estimation. You have to and you're really just looking at it from a level to level perspective. You break back up here, you target VWAP, you're getting out of VWAP, you're just level to level type analysis. Whereas when you get into an open air conversation, you have a little bit more to play with there. You can wait on confirmation, you can structure the trade a little bit more, and you can also see the trade through the lens of a trend and not just a level to level trade. I think, in my experience at BluSky over the last year, in dealing with a lot of the traders and having a lot of conversations over the last year, I feel like there's a tremendous amount of high quality traders at BluSky, like high quality traders at BluSky. Great technical reads, great systems, great application, you name it. And I would say on the level to level analysis, I would say it's pristine. Like there's some confidence I feel like a lot of traders at BluSky have going from level to level. However, I would say that carrying a trend as a day trader has been, and if you disagree with this, please let me know. But I have, from my experience in talking with the traders of BluSky over the last year, carrying a trend can be a little bit more difficult than just the level to level analysis. And this is where that concept of open air can be really, really helpful, because when you're in an environment where you break out here, you can't anticipate a trend happening on the bull side of the equation here. And so you are legitimately just level to level, because you can't anticipate the market breaking out here, breaking out here, breaking out here, breaking out here, breaking you. There's too much chop to the left of the chart. There's too many data points to the left of the chart. There's too many resistance levels. There's too much overhead. There's too much analysis that says that the market can't trend in the bullish side of the equation. Doesn't mean bulls can't get that level to level. It doesn't mean the bulls can't get a great trade from 32 to 43, but you have to target 43. And so you can't really see it above 43 because that's where VWAP is. Whereas when I'm looking on the downside and coming into this open air concept, when I'm looking at the downside here, and I look at a scenario where I have this level to this level, it's a very similar conversation, quite frankly, from the 31 breakout to the 43 VWAP. It's very, very similar. However, the biggest difference is this. You can definitely see a trend develop on the downside here, because yes, you're level to level between the 10 breakdown and the 93 pivot point. You're definitely level to level there. But when you come out to a longer time frame on the 15-minute chart, for example, I don't see anything underneath that level. which means you have open air on the 15-minute time frame. When I come out to the 30-minute time frame, there's really nothing there underneath that pivot at 93. I have open air on the 30-minute time frame there. When I come out to the hourly time frame, I see open air down there. And it's a similar concept here. When you look at the market breaking this support level a couple days ago, you went all the way down to the next level of support because without a pivot, without a formation, because there was open air. See, in open air, they're otherwise known as volatility pockets, and they're akin to if you've ever been flying in an airplane and you go through a cloud, you have this volatility pocket where you have some volatility, you have some turbulence, you go down a little bit, you fill that pocket. Same concept applies here. And so the open air concept is a really important one to me because it tells me how I can structure the trade. It tells me, am I legitimately just going to be level to level? And I should just think about it through being aggressive above a level, targeting another level, and then just getting out. Or should I structure it a little bit more where, hey, wait on confirmation, get it underneath the low, a loose management on the stop loss. And so when I'm looking at the market here on the downside, and again, and it's not that you don't see a trade to the top side. I personally don't right now, but it's the fact that if you can get underneath this 10 level, you can T1 down to 93. You could scale out at 93, slowly adjust that stop loss to see if you can catch that runner, see if you can catch that open air, see if you can catch that volatility. Whereas when you're looking to the top side here, you're not trying to catch anything. You're trying just to capture level to level to level to level to level to level, whereas you can see that open air underneath. So that's just something to keep an eye on when we do, as we do navigate the ES. Now on the NQ, it's a little bit of a different conversation here because you have Micron. And Micron was a catalyst yesterday. You had Qualcomm, that was a little bit of a catalyst yesterday. And you had Apple today, which was a bearish catalyst. And so before we get into the NASDAQ from a technical read, I think it's important to understand kind of the overall analysis that did come into the market today to influence the NASDAQ. And then we'll come back in to talk about it from a pure technical perspective. Now, when you are looking at the NASDAQ here today, let's first talk about the major news of the day and what I would describe as the number one catalyst this week in the marketplace. And that's Micron's earnings report. Now, for those of you that are unfamiliar with the importance of Micron, for example, Micron is the fourth most important stock in my estimation in the AI trade. The only ones that surpass Micron, I would say, are NVIDIA. They're ranked number one. Google is ranked number two. And Taiwan Semiconductor is ranked number three. Micron is ranked number four. ASML is ranked number five. That's the top five. That's tier one companies. Now, it makes every sense in the world to have NVIDIA, ASML, Taiwan Semiconductor, and Google as a tier one AI name. Micron's the one that kind of stands out a little bit because Micron wasn't that before the AI environment. Micron was a popular trading company. It was a popular memory company. A lot of people used it for cash flow systems, quite frankly. But ever since the AI trade and really ever since last year, Micron has been just a powerhouse. And so earlier this year, it was actually, I think in December of last year, I moved Micron from a tier two company into a tier one company in the AI arms race because Micron represents a bottleneck in the AI trade. Now, Micron is the memory chip. And when you think about Micron's earnings report today, just the raw numbers were outlandish. EPS beat by 18%, revenue up by 345% year over year. Just a absolutely mind-boggling number on the revenue handle year over year. This type of earnings report is like reminds me of NVIDIA literally in the first year of the AI trade. This is what this earnings report reminds me of in Micron today. So you have an 18% beat on EPS. You have a 345% increase in revenue year over year. and then you have an 18% increase in forward-looking guidance. And outside the raw numbers, which were outlandish, just absolutely outlandishly positive, outlandishly good. Micron didn't hesitate after the print yesterday. It was up 10%. NASDAQ was spiking hard yesterday after the close yesterday because of Micron. They're obviously a catalyst, but I felt the CEO made a comment that I just felt like summarizes Micron very, very well. When you're talking about ultimate supply and demand, Micron is the company that provides a lot of the memory to the AI infrastructure build out, which is a multi-trillion dollar build out right now. And that input cost is going up and up and up, and that demand is going up and up and up. And there's been a lot of questions recently on the AI infrastructure. Well, we need more memory companies. We need more memory companies. We need more memory companies. And I'm like, yeah, we need more memory companies, but unless you're willing to put $10 billion into R&D to build out the memory company, it is extremely, extremely difficult. So you got Micron, you got Seagate, you got WDC, you got SanDisk, but Micron is the catalyst. And the CEO came out and said, if you look at our demand equation between now and the end of 27, right? So a year and a half out from now, a year and a half, exactly, Jaja, not overnight, not over months. These are years in development. And so what the CEO came out and said was, we have demand that we cannot supply all the way out till after 27. So if you're ordering something, a big thing from Micron right now, and they're saying, hey, I need to build my data center right now. I need $1 billion in memory. I need this, this, and this. Micron says, great. Let's go ahead and let's put that order in. They're like, yeah, we'll pay you $2 billion. They have a $41 billion revenue handle right now, guys. It's outlandish. And so, by the way, next quarter, that's going to be 48 to 50 billion in next quarter. This quarter, 41, next quarter, 48 to 50. Just absolutely unreal. And so all these companies that are in the AI build out, they're like, we need semiconductor chips, we need memory, we need all this to build our data centers. And they're like, put the money down, not a down payment, put all of the money down right now. And so you put all of the money down and they say, all right, we'll get it to you in a year and a half. That's how much demand and that's how much supply they don't have. And so you have this scenario on Micron where it is just this bottleneck and I love what you guys said there. The number keeps going up. It's a memory cartel. You're absolutely right. It is. They have a corner on the memory side of the equation and they can charge whatever they want right now because the demand threshold is legitimately through the roof. And you don't have to take my word for it. They just increased guidance by 19%. And they just increased revenue year over year by 345%. They have a revenue handle at 41 billion, and that is expected to go to 48 to 50 billion over the next month or so. Excuse me, over the next 3 months or so. So just an outlandishly positive report coming out of Micron today. And by the way, in the future, Micron has to do this every quarter. Every single quarter, Micron has to do this, or they will start getting the NVIDIA treatment of, yeah, we know you're a great company. We know you're a great earnings company. And we know you have outlandishly positive growth, but we're now spoiled children and we want you to raise guidance by that every single quarter. And so the bar is extremely high for Micron, but they're passing that bar. So that was the first story that really kind of impacted the NASDAQ on the overnight session. And when you are looking at the NASDAQ on that overnight session last night, I think you could have saw this move from a SpaceX satellite last night as you saw the market testing down on the as we came into the conclusion of Power Hour yesterday. And then all of a sudden Micron reports and we're all the way back up to the top here, And so Micron really established a pretty positive catalyst for the NASDAQ yesterday. The problem is the NASDAQ sold today despite that catalyst. You know what didn't sell that much? Dow Jones, RSP. But on the cash open, you had some other news come out in the market. Apple raised prices. That put a lot of pressure on the AI trade, honestly, because it brought up concern of margin contraction is what it brought up, the concern. That sent the market down. And if you were able to catch that breakdown earlier in the session to a team, it was a beautiful breakdown on that cash open here today, sitting right underneath that support level. I thought it was a massive overreaction, jaw job, but it's only an overreaction if you understand that what specifically on Apple. But there was concern on margin contraction before Apple said it. And then when Apple said it, it's like, oh my goodness, now the richest cash company in the market that is shielding consumers to a certain extent, they're now passing on that additional cost into the market as well. And so it wasn't necessarily just Apple. There was already concern on the AI trade, and Apple was just one of the bigger companies to join in on that concern here today. On the flip side of that Apple news, you had Qualcomm raising guidance today on the revenue side of the equation. So there was actually a lot of news that came into the market today on the NASDAQ specifically, some on the positive side, Qualcomm, Micron, both on the positive side of the equation. Apple and margin contraction on semiconductors were on the negative side of the equation. And that's what really kind of propelled that cash open. But the cash open was a volatility move that brought it right back down into the lows before we even got Micron's report, and then is right back up. And so I felt like when we're understanding the Nasdaq today, it's really important to understand that that Micron news was kind of the catalyst, and then there was some overnight concern building that Apple had something to do with on the margin contraction conversation, and that just propelled a little bit of a breakdown here on the technical side. But team, if it wasn't for Micron's pump yesterday, we wouldn't have had this sell off today, because what did it do? It created open error. And so as you're seeing this scenario on the top side here, you look at this scenario where it breaks down here. Where's the next level? Down here around 940. That's a 150 point zone right there. That's open air. What's underneath this level? That massive pump over here to where they don't have a lot of support. And so as the market goes up very, very, very fast, it feels really good if you're on the bull side of the equation when the market's going parabolic. The same way it feels really good if you're on the bear side of the equation when the market's selling off. However, if it wasn't for the Micron pump yesterday, we don't get the environment of open air today, where you look left to the chart and you have these big pockets. And so you have this, when you break down here, you're level to level until you get down to this level right here at the 940 level. Obviously, that did not sniff it on the cash open today, but then you enter into open air. And what does it do? It violates the level and it goes down all the way. That's open air. And so when you're talking about open air, again, let's look at it with fresh eyes here. Let's talk about if you're trading the NASDAQ right now. And you're saying, all right, okay, NASDAQ's back up into that pivot. Are we going to break out? Well, the market feels like it wants to break out. Do we have open air? No, we don't. We're inside ranges. We have a short porch up into 40, and then it opens up into 100. And so where you're looking here, you would be level to level here with the anticipation of opening up a little bit into here. And so once again, if you're level to level, this is what helps me kind of determine how aggressive I want to be. If I'm just level to level because I don't have a philosophy that the market can run, it's like if you're a horse and you allow the horse to go out into the wild, it's going to run, it's going to jump, it's going to do all these things, it's going to run fast. That's open air. Whereas when you put baby in a cage, well, it's just kind of a little bit choppy, kicking things around, kicking dirt, sniffing everything, doing everything besides just moving. And so when you don't have open air, it doesn't mean there's not trade setups. It just means you're level to level. And when you're level to level, you have to be more aggressive on entry. You have to be more aggressive on management. And you typically want to be a little bit lower position size than what your standard position size is because you don't have room to breathe. Whereas when you're looking at this upper level and you have a little bit more room to breathe, you can play it a little bit more safe. You can say, all right, I don't have to be too aggressive with my order. I can wait on confirmation because you got room to run. You have room to maneuver in that scenario. Now, open air can also be utilized from an indicator perspective. And so open air is a technical concept that we see on charts where you're looking at the level to level and when you have tight levels versus where it opens up. That is the open air where you open it up. That's where price can really kind of live in momentum. I'm a big believer in momentum. I just don't see how you can assess this breakout as a momentum situation because you have a short porch. There's a short porch before you get into the next level of resistance. Whereas when we get up to this upper area, it opens up a little bit more. And so one suggestion I would have is really take a look as you go through your daily routine. And one of the things that all of us do in our daily routine as we get going is we draw our levels, right? We draw the ultimate high of the day. We draw the ultimate low of the day. We put on VWAP. We understand our orbs. We put on our levels on our bank levels, on our pivot analysis, on our previous resistance, new support. We all draw our levels. We might have different techniques in drawing our levels. I might prefer horizontal levels and moving averages. Other people might prefer more vertical levels and other things. That's not my point. My point is, once you do draw your levels, look at the vertical distance between the two and don't treat this level to level the same as you would this level to level because you do not have open air here, whereas you do have open air there. And once again, the difference is this: one, you can catch a trend, the other one, you can catch a trade. That's the difference. And typically speaking, I love those environments. I don't love trading in environments where there's not open air. I just don't do it. I don't like it. I don't love it. It doesn't make me happy. I second guess everything. I overanalyze everything. I adjust too quick. I just don't love it. I don't love the tight level to level analysis. I love stepping back, looking at the broad picture, and seeing where price can breathe. Because anybody can catch this trade, not everybody can catch this trend. And that's what I want to do is catch trends, not just catch trades. And so the best traders will allow that open air to exist, whereas in level to level, you got to be a little bit more aggressive. So that's I just wanted to talk a little bit about that. Now, I want to talk about the dollar and I want to talk about what I like a little bit more today, and that is on the commodity side of the equation. Now, um, I was actually 2 for 2 last night, Ace, on the pajama traders. I caught the short here on the NASDAQ last night right here. So, and by the way, I loved this short last night. I thought I was going to get a home run. I didn't. I got a base hit, but I thought I was going to get a home run. So I caught this short right here. So you see how the futures, this is after Micron. So Micron has its pump, right? Futures reopens right here. And this is what I love seeing this in the futures market going into the Asian Open. It's one of my number one things I love seeing going into the Asian Open. So you have this pump, which immediately I know there's some open air. Whether you're talking about the breakout and the continuation, there's open air there. Whether you're talking about the breakdown, because we just got momentum, right? Out of an environment where we didn't have momentum, that's going to create pockets. It's going to widen everything out. And so, do you see how this just kind of goes neutral from here's the Australian Open right here. Here's the Japanese Open right here. So Australia opens up and it flatlines. Asia opens up and it's still inside the range here. And so when you're still inside that range, I love that. And do you see how it breaks down right there? Order right underneath the low. I waited for confirmation. Order broke down right there. Order underneath the low. My T1 target was this right here. My T2 target was down around the 900 level. And so I did catch that one. And then when it flipped the script, I got stopped out right here, by the way. When it flipped the script, I went long, kind of coming into the couple hours before the London Open, and I caught a little bit of the trend back up to the top. And so I really enjoyed last night's trading session, honestly, because unlike yesterday, it was very volatile and very sensitive. I thought yesterday's trading session was a good session as well. But last night, it was kind of just a lazy day trading environment, and I didn't mind it at all. Couple nights before, I wish I was I wish I was there, and I wish I would have caught this entire trend, but I wasn't going to stay up all night managing that trade. And so I didn't mind the Asian session last night. Um, because of the Micron news, I knew it was going to create a pretty decent scenario. And it did. It did. Because after momentum pump like that, you know you're going to create pockets where price can really kind of move in those areas. Now, one thing that I do want to talk about, because I feel it's extremely important for futures traders who are really focused on the commodity landscape, both crude oil, which I feel is a little bit more of a legitimate tradable asset right now than it has been in recent history. I've actually done a little bit more on crude oil in the last few days than I've done in the last few months, quite frankly. So when you're looking at the commodity landscape, there's a scenario here that is extremely important to understand. In a lot of the commodity landscape, you're sitting at some degree of support right now after a sell-off. And the reason that has happened, because there's a logic to it, is the Fed was after the Fed policy last week, we had an anticipation of further increases in interest rates, and the dollar is very sensitive to the interest rate conversation. And so and I talked about this last week in the lab, but as the market anticipates more interest rate hikes, the dollar, you get paid more money to hold the dollar. And so the dollar's up, 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 up. And that puts a lot of pressure on pretty much everything, but specifically gold, silver, metal classes, commodities in general, primarily the metals, but it also puts a lot of pressure on every commodity out there. Well, that was then. This is now. Now, what do we have? We have a scenario where the dollar is now technically overextended. So we have a move from 99.5 up to about 101.5. That's a $2 movement on the dollar. Now, for people that trade equities and people that trade indexes, a $2 move does not seem like a big deal. When you're talking about the United States dollar, that is a massive, massive, massive deal. People who say currency it moves faster than other areas of the market, that's ignorance. That it doesn't. It just feels faster because it's the highest leverage tradable instrument in the entire market is the foreign currency market, which is leveraged at 50 to 1 in most countries, but can go up to 400 to 1 in other countries as well. And so you get this situation where the dollar goes up, 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 but now it's priced in and now it's overextended. And now you can start anticipating a counter trend move back down into support. Now, whether it's support at the 9 EMA or whether we get something all the way back down to 100, I don't know. What I do know is it looks like the dollar has ended its previous pump and now it's losing its momentum. And that loss of momentum usually precedes a pullback scenario. You also see that scenario where RSI deeply overextended. You're starting to see that hook here on RSI that will come back down to the 70 barrier as well. That basically brings that price back down. Now, why is that important? Because if I'm right that the dollar is going to pull back, that's my catalyst, that's my analysis. If I'm right and the dollar pulls back, I'm going to have some decent trading environments on gold over the next couple trading sessions. And it's not that I feel like gold is a pickup on the longer term time frames yet. still bearish, still concerned, still underperforming everything. But gold is sitting at a massive, massive, massive important support level right there at the 4K level. And so that's just something to keep an eye on, team, over the next few trading sessions. Because when I look at that, coming back to that open air concept, well, team, when I look at the dollar and I'm looking at this, and I anticipate the dollar coming down, well, if I'm right and that dollar comes down, I'm willing to bet we break out of this very, 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 very clean 40-60 level. And when I look at that 40-60 level through the concept of some open air, I look at that 46 level and I'm like, okay, can we get above that level and start working into this 4108 level? Can we start working into this level at 4140? Can we ultimately get back up into 4,200 here? I have a little bit of room on the top side. And so even though I do not believe that the overall bearish trend in gold is starting to come to a conclusion, I don't know that yet. What I do know is that gold is sitting at support and showing a really good intraday reversal. What I do know is the dollar is sitting at an overextended resistance level and anticipating a pullback. So if this intraday reversal, which is the best intraday reversal in the entire market right now, if this intraday reversal plays out and the dollar continues to pull back, we're getting up here at 4108. We're going to get 4140. We're going to get that 4200. And so I don't see it as a pickup on the daily chart. I don't see it as a pickup as a swing trader. I don't see it as a pickup as an investor. I don't see it as a pickup on any longer time frame than intraday analysis, because the dollar is still bullish, and I'm just anticipating a bullish pullback on that. But if that occurs, gold has a 90% divergence against the dollar, meaning 90% of the time it does the exact opposite of what the dollar does. And so gold's on my radar a little bit more. I like the potential breakout here on gold. That's something to keep an eye on as we kind of navigate power hour today, as we navigate the overnight session. I know Coach Breezy does the overnight session. I know he likes to look at gold as well. And so that's something to keep in mind on. Can gold hit 5K this year? Gold cannot hit 5K if the path of policy is correct, Ace. And so to answer that question, you have to answer it fundamentally, quite frankly, because I don't believe that the current path of policy is accurate. I don't believe that. I talked about it last week in the lab, but I right now the market is anticipating 2 to 3 interest rate hikes by the end of the year, with the Fed fund rate getting into 4.25. It's currently at 3.5. If they're actually going to raise rates 3 times this year, gold's not going to sniff 5K this year. That's the worst environment for gold historically. It's absolutely the worst fundamental environment for gold ownership is in an interest rate hiking environment, because you can't fight the dollar. The dollar's too powerful. It puts too much pressure, and quite frankly, long-term investors in gold with a lot of profit usually have to sell off gold to pay down other areas of the market. And so it's just a really, really nasty environment if that path of policy is actually accurate. Well, the question is it accurate? And I don't think anybody in the market actually knows. What survives hikes? Max 7 and the AI trade. But here's where I feel like the market has it wrong, Ace. I don't believe we're going to get 3 hikes by the end of the year. Like, how many of you guys believe that we're going to get 3 interest rate hikes between now and the end of the year? We only have 4 meetings, guys. We only have 4 meetings. And so I just don't believe we're going to get 3 hikes, because the anticipation of the hikes is based on the current landscape of inflation, which is driven through the CPI report and the PPI report, which 60% of all elevated inflation is due to the Straits of Hormuz being closed down. Well, that's a variable that exists between now and December. That's a variable that can easily modify the inflationary landscape because it's not like it was a pandemic that hurt the supply chain that took years to overcome, the same way we went through the inflationary situation the first time, right? This is a manufactured crisis. This is a human crisis. This is a something that we created that we can find a solution to. And I say we because collectively we are Americans, but it's one person really that has that decision. And it does seem like the president is pretty committed, despite a tremendous amount of GOP pushback, is pretty committed to keeping that MOU on track, the negotiations with Iran on track, and trying to do everything he can to get the Straits of Hormuz opened and traffic going through that. Well, if he's successful on the path on the negotiation, not my say, but that's kind of over the next 60 days. We're seeing some positive signs towards there from a market perspective. But if there is increasing traffic through the Straits of Hormuz, then B, gasoline's going to come down 7 to 10% in the next PPI report. And if that occurs, look for a rapid repricing on the expectations of Fed policy. The one thing that the Fed won't do right now because of the historical mistake they made 5 years ago was say the word transitory. But that's what this situation is. It is a transitory environment that was created, that we as human beings manifested to a certain extent. We took action to do this. And so if it gets alleviated, the Fed can be on a path to stabilize that interest rate environment. And so let's say that the Fed is wrong right now on the path of policy, which would not be abnormal since the dot plot is legitimately never accurate. Let's say they're wrong on that. Well, at that point, we're not talking about interest rate hikes. We're talking about a pricing event on the dollar that was nonsense. Dollar gets smoked back down. Gold, listen, it won't be a day trade. It's going to gap and run in that scenario. So if the path of policy is wrong, I know this is a very long-winded way of answering the question, but I felt it was a good question. And you guys know me, when I see a good question, I like to give a lot of detail. But to me, if the path is wrong, it's at that point that that gold can get back up into 5K. Now, I don't have any qualms calling out gold back at 5K by next year, Ace. But by the end of this year, we'll have to take a reversal of the path of policy, which I believe has a chance. I really do. I wouldn't be talking. I'm an inflationary hawk, guys, like a hawk, like as hawkish. I am a hawk by nature. I am a inflationary hawk. And I was very open, if not for 3 straight years, annihilating Jay Powell on that the biggest, most ridiculous Fed commentary I've ever heard was calling the supply chain post-pandemic transitory. I felt that was just the most illogical, idiotic thing I've ever heard in my life, to be honest with you. So they're very scared about using that word transitory because they were historically wrong last time. And when they were historically wrong, that put more inflationary pressure on US citizens than at any point since the 1970s. And we're still dealing with that inflationary pressure on that historical mistake out of transitory. But every environment's a little bit different. And the biggest difference here is this is a manufactured thing on inflation, both in terms of the tariff induced inflationary pressure in the PPI and the CPI report, as well as the Iranian situation. These are manifested. We created these environments. And so if we see a little bit of reversal of that, you can see that path where the dollar comes back down, interest rate expectation comes back down, and then you see that gold pump. And so, yeah, I think we need some help on that, Ace. Don't get me wrong. There's nothing in what we're talking about here that would get me off my longer term call on gold. There's nothing that could happen as support, at resistance, technically, fundamentally, behavioral, economically. There's nothing anybody in the history of the world could say to get me off my call on gold. However, it is a scenario where it's very important to understand the why of why gold's going down because it is mechanical. It's not random. There is a logic to it. And that logic is increasing interest rates sends the dollar up. The gold is priced in dollars, which means as dollars go up, gold goes down. By the way, get ready for silver if we ever get it at $50. That is a massive. I said this the other day, but that $50 level on silver is there's not a more interesting level in the entire market than silver at $50. I'll just put it like that. And we could get that fairly quickly here. So great question, Ace. I just felt I'd give it a little bit more of an detailed response on that one. Can we get it this year? Yes, but we need a reversal on the path policy. All right. Outside of that, yeah, 50 silver. Yeah, bricks truck, baby. 50 silver is a major catalyst. Like I don't have an opinion at 58. I don't have an opinion at 60. I don't have an opinion at 62. I have a major opinion at 50. But what I'm interested in gold here, once again, is just trading the pullback on the dollar. And if I get that pullback on the dollar here, team, there's some open air here. And when you're talking about open air on gold, that's sexy. That's sexy. So keep an eye on this 40-60 level on gold, a very important intraday level. We're obviously just about 10 points south of that right now. You're coming into the 5-minute chart here, and you kind of see that through a cup handle. Can we get back up there and break out? By the way, aggressive traders, I think you could front run it right now, but that's a different story. Last thought on the commodity side of the equation here. I also kind of feel like as we're dealing with some chop in the equity market, when you're looking at crude oil, a little bit more consistency I've seen recently in the technical structure of crude oil. In fact, when we were dealing with the will they, won't they type scenarios, like lots of chop, lots of gaps, lots of nonsense. When you come over to the last few trading sessions, team, you're seeing a little bit more consistency play out here on crude oil. In fact, you're already kind of in a trend on the top side on the 5-minute chart. You come out into the 15-minute chart. You see that nice little trend developing there. You look at that consistency. Look at the consistency here. Breakout extension, secondary pattern. Breakout extension, secondary pattern. Breakout extension, expect a secondary pattern. That's a very consistent technical backdrop, quite frankly, on crude oil. And that is something we have not seen in a while, is consistency on the intraday side of the equation on crude oil. In fact, the crude oil had one of the better reversals coming into the market today. I know the market was all get out on the downside here today, but look at crude oil right after the cash open right here, just basing, beautiful high base in a beautiful W formation with a beautiful breakout. And so looking at crude oil with fresh eyes here a little bit, just coming into those shorter time frames here, you're looking at kind of developing right into this level right here, the 72.20 level, let's call it 21. So you're kind of developing right there. That would be the next breakout situation at 72.20. And that probably gets us into the slightly north of 73 pivot there. So that is something to keep an eye on as we navigate power hour as well. You also had a couple economic reports that are important today as well. PCE report, like I said, was a slight miss on the year over year, in line on the months, but the market's already forgotten it and it's moving on. Initial claims had concern for the last 3 weeks. Initial claims came in under expectation today, and the GDP report got revised from 1.6 expectation up to 2.1 on the GDP. So pretty good cyclical information coming into the market today. Gold, crude showing reversal tendencies as the dollar is showing extension. And as we conclude the lab here today, guys, the technical concept I wanted to talk about was open air. But as we conclude the lab here, looking at the ES, still kind of stuck in mud here. Still kind of stuck in mud here. Don't really have a strong opinion, although that is a nice little pullback if you wanted to trade it to that break, the 74.30 breakout. Decent pullback. Don't love the environment, quite frankly. And Q here as we conclude the lab here. Seeing a little bit of chop here, a little bit of chop here. Still don't love it. Tried to break that level, snuffed right back down, still inside range. I know we're going to talk ES and NQ and Power Hour, but my head's on gold and crude oil, ladies and gentlemen, as I don't love the technical condition of the Nasdaq and the ES, but I do like what I'm seeing in silver and gold, and well, primarily gold and crude oil. It was a lot. It was a lot. So monthly silver test 0.7 fib in the last 3 mass moves over the decade. There's been what are you're about, yeah, you're about that on fibs on silver on this latest run. Just kind of looking at the monthly here. Yeah, right there at 50. It's such an important level, team. Like, give it to me at 50. I said it on that day trade the other day. Give me my number or give me nothing. Give me 50 or give me nothing on silver. By the way, if that happens, gold's coming to 30, 38, but that doesn't mean we're not getting our pullback in the dollar. Keep an eye. This is the cleanest level in the market, by the way. Gold at 40.60. That's cleanest level. Yeah, I just want the dollar to come down 2 ways. Definitely. All right, team. I'm going to take a little bit of a 5-minute break, and then I'm going to come back fresh, and we're going to be dialing in Power Hour. If you guys have any stocks you want me to take a look at, obviously we can talk about them in Power Hour as well. But in Power Hour, we're going to be looking at the intraday charts of the NQESGC contract, a little bit of crude oil. And so, team, get up, grab a glass of water, take a little bit of a break. I'll be right back. Stay profitable, team, and I'll see you in 5. That might be true, Jaja. As I wait for Nick to bring me off the screen here, that might be true. We might be looking at 2-minute charts here because there's not an edge in the equities outside of that. Um, TV. This Coach Matt talking shop in Power Hour today. Just got done with the Trading Lab. Excited to be here for Power Hour to watch the price action play out. Last hour of the day. Going to be fairly fascinating as we watch this play out. I'm getting an echo on my side. Give me one. That should be better. All right. No more echo. There we go. All right, team. As we come into Power Hour, we talked levels already in the lab here, and so what we're going to be looking at here, team, is just kind of a situation where the market is double topped on the NQ here. Now you're testing this trend line here, and again, don't love the levels here. A lot of chop to the left hand side, but I can certainly understand somebody that wants to kind of fade this price action right now. You're looking at a scenario here where you have this downward movement in price. You're violating the old support level. You're breaking under 50 on RSI with a negative slope. And whenever you're breaking under 50 RSI, if you're breaking 70, if you're breaking 50 negative slope, that's a confirmation situation for RSI. And it's a little bit of I'd say a little divergence there, but looks like the market on the NASDAQ wants to kind of test this 610 level. And then there's some battle zones here. Like I was saying, I don't love that environment. Give me 1 second. I got to keep my eye on a couple other commodities. And we'll take a look at gold or crude if they give us anything. If you're looking for a breakout, the only breakout that is happening right this very second is crude oil. And you could basically structure this trade kind of like just get it above the high here, make sure we're getting a buy stop. Let's just do 5 contracts, but let's just get it above the high here. And then as it starts to go, let's get a stop loss right underneath that pivot right there, and then trail against that 9 EMA there. So that's what you're looking at here. That's a good breakout, by the way, on crude oil. When you're looking at GC, we were talking about GC. GC still kind of stuck in mud on their neutrality, and I would not touch GC underneath 4060 and above this 4042 level. Like 4042 brings it back down to VWAP most likely. A breakout of 4060 sees the expansion territory on that retracement. And so gold might be stuck in mud between now and Power Hour. We might get something on the overnight session, but I would definitely want to have something regarding gold if we do break that 4060 level. Like I said, it might be today, it might be during Power Hour, it might be later on tonight. I don't know, but I have a strong opinion at that 4060 level on GC. Let's take a look at the ES contract as we come into Power Hour, and a bunch of choppy nonsense over here on the ES. Somebody else make a better call out on the ES here today. Chop, 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 chop. Where does it not get choppy? Like we talked about in Power Hour, you got a level here on the downside, and then it opens up underneath this 93 level. So do I have an opinion at 25? No, I don't. I don't have an opinion inside neutral ranges. I don't think anybody should have a strong opinion inside neutral ranges. But here you start working towards the low. That could be a reversal situation. I like the breakdown. I don't have to rinse repeat. The reason I like the breakdown, talked about that in the lab here, but you don't have open air between the 10 level and the 93 level. It opens up underneath the 93 level. So you would be front running this breakdown, and then you would be really excitable if we get underneath 93, because if you get underneath 93, you can get froggy underneath 93. Look at that, guys. This is 93 right there. So I'm going to draw a line right at 93. Right there. There's 93 right there. So you work to that level. Look at that open air, guys. You can live under there. Let's see what occurs there. What's up, Breezy? How you doing, brother? By the way, the only one I'm in right now is the crude oil trade. The other ones are all like, I need to see something a little bit better than what we're seeing currently. On the NASDAQ, I want to come back over to the NASDAQ. I just don't love it. Don't love it. Don't love it. Jaja's right. We're gonna have to get down on that 1 minute time frame there, Jaja. Let's see if we can find our edge. Yeah, just go underneath the low. There's that 1 minute edge right there. The 1 minute time frame tells me you can go underneath the low, targeting 600. You'd have to play the bar. There is an edge here. It's not my style, but there is an edge here. Down to 600. We'll see if it plays out like that. There's so much chop to the left. I'm not going to make the trade. I'm just saying it's a decent edge on the bear side. Yes. I would like the trade more if we had more room on the left-hand side of the chart. So I'm not going to make it, but I might make it if you come closer to the trend line here. But I just don't love it. Like, these are C setups, in my opinion. You don't have a lot of range. You got to be perfect. And I think it's just too choppy. Like, I don't love it. These are C trades. There's an A trade on gold breakout. There's a good trade on crude oil going on. But in the indexes themselves, like, let's work to the edges here. But then I won't love it until we're working at the lower, we're working at the highs. Like, there's too much chop there. The ES, little cleaner. That's not ES, that's ETH. MES. I always do that, by the way. Little cleaner here. You take the breakdown to the low point at 10. Again, a B setup, I'd say. Your middle of the range, got a low base, a little bit extended from the 9 EMA. Like, I just kind of feel traders right now are begging. I'm begging. I'm saying, give me something better than this. I think if you do anything that's to the downside, that's what the price is telling me. The price is telling me it wants to come test these support levels. I'll be more interested to see what patterns develop at those support levels. Just dancing there. I want to give gold. All right. We got gold on the right, ES on the left. This is a major, major breakout level on gold. Get up there, base break. That's the perfect ideal. on the ES down base break. Pretty simple ask. Get to resistance, base break. Clean it up. Let's go. My jaw still dropped about Micron's earnings report, by the way. Here we go with the Bears. Bears making a move here, team. Um, I'm hoping you guys caught a little bit of that crude oil breakout. The 60 level on gold is my favorite breakout, but the trade on crude oil that's going on right now is pretty good breakout. And it's the only thing I currently have going on. Other than that, I'm pretty flat right now. What's up, Change? This is Trade C, built on the Trading View platform. Oh, beautiful background, though. I don't know what it is. I don't believe it's Telluride, though. I just like the background. I'm also going to really like it if gold gets to 40.60 here. Oh, the morning session was lights out. It was straight down, clean break too. Like the morning session was really nice. The afternoon session has not been as nice. It's been full of chop and nonsense. But this violation on the ES, there's a similar violation on the NQ, but right as the cash open occurred here, you broke support and it was boom. The only power we're getting out of power hour is commodities change. So we're definitely getting power hour in gold and crude oil here. I don't know how much power we're going to get out of the ES and the NQ and power hour today. Gold is on the right-hand side, ES index on the left-hand side. And just to kind of, again, show you the 460 level here. That's the 4-hour time frame. You're above the 9 EMA. Lots of open air there. Let's watch that retracement play out. Basically, you're counter trend trading the daily chart, which means you're trading a bearish retracement on the daily chart. See that? See the power of that zone? You saw it tested right back down. Ooh, we know the supply's there, team. Now it's just a matter of get up there, base, break, and make the short sellers just absolutely punish them. Just punish them. Punish the bears. Punish those filthy bears on gold. Little fade action here on the ES. Again, the zone is 74.10 on the zone. Resistance on gold is 40.60. I thought Micron had an absolutely excellent report today. Fundamentally, they're lights out. 18% beat on EPS, match it on the guidance update. They had 345% increase in revenue year over year. They have demand for years. They can't keep up with it. I think you could build 3 Microns and they wouldn't keep up with the demand. That's how much demand is there. Like, it's absolutely insane. Oh, I like Micron long term. Now you know what you get when you have it though, right? Like, you know you're gonna get volatility, you know you're gonna get radical moves, but you have a long-term opinion. I just think Micron is in a special it's a special company right now. And I think, yeah, like, it's not just Micron, by the way. WDC, Western Digital, you have Seagate, STX, you have, SanDisk, SNDK. All of them are doing the same thing. It's Micron's the linchpin, obviously, but if I had to rank them, I'd honestly I would personally have WDC up there with SanDisk, but probably Seagate slightly underneath them. But on Marvell, like, you can make arguments on the memory side with Lam Research, Applied Materials, Marvell, but they're more on the I don't want to call them pure semiconductors because they're not, but they're more on the semiconductor side of the supply chain. Like, those 4 with SanDisk, WDC, Seagate, and, Micron are, like, the core memory, but they're all interconnected. You know what I mean? From y They hold hands in the AI supply chain, all these companies do. But I wouldn't, like, call Marvell a bottleneck for the AI infrastructure build out. I would call Micron that. And by the way, I really like Marvell a lot. I'm a big fan. I just don't invest in Marvell because I there's other semiconductors. Everybody has their favorite semiconductor, you know what I mean? Let me rephrase. Everybody has their 3 favorite semiconductor companies. No, I love Marvell. I think it's a fantastic company. And I think that like, even now, I think Marvell is underappreciated uh, versus what the market is. And I know that's kind of weird to say after a Marvell run from $80 to $260, but I still think they're slightly underappreciated versus what the market is. Not a bad look here, team. I'm looking at gold here. See this little slight increase in support? Now is the 9 EMA right there, that pink line. Is the 9 EMA going to give us a little bit of love here? Overextend bound on the yes. Still inside ranges here. That is a good question, though, Change and everybody else. What's your favorite semiconductor company to invest, to trade, you name it? What is your favorite semiconductor company? And if you say SMH, that is an acceptable answer. Mine is NVIDIA, king, queen country of all things AI with the cheaper valuation than every other stock in the space right now. So I still love NVIDIA, but there's a lot of other high flyers out there right now that are much better technically than NVIDIA. By the way, one of my favorite technical formations is neutrality with an increase in support. Like cup and handle, ascending triangle, those types of patterns. Cup, handle, breakout. Stocks get tired running from support all the way to resistance. Increase in support shortens that distance going into that break. You can see it through a little bit of room to run. You see how far it gets extended here as it goes into that break? That's such a big ass team. I can't tell you how big of an ass that is. When you're pumping into a major level and you're this far extended from the 9 EMA, you're too far removed from Mm. One of my students just hit me up in Discord. They said, "Hey, listen, I don't know what you're doing today, but I caught that crude oil trade." And he showed me his entry. I'm like, "Oh, you had a better entry than me." Oh, today in general, Jaja? Yeah, and I don't trade the open. So it's been, do you see what I'm doing right now? This has been my day today. Not gonna force the issue. I got some opinions on asset classes. I'm already in the crude oil trade. So I'm gonna let the crude oil trade play out. But outside of that, like I have not liked the ES and the NQ today. In fact, 3 hours ago is when I started doing my routine. Well, about 4 hours ago, I started doing my routine. It was about an hour after the market opened. And I was like, oh, okay. So I missed a beautiful breakdown today. By the way, I don't trade the New York session. I'll trade the Asian session later tonight, though. But ever since then, like it's like there were some good technicals in the morning session, but like it's been junk since then. Like you had a volatility move on the open, you had a snapback volatility move after the open, and it's been choppy out of everything ever since. The only edge you got is on the commodity side of the equation right now, in my opinion, and that's because the dollar's overextended and is starting to form that pivot. So that's why I'm, looking at gold a little bit more. I'm looking at crude oil a little bit more today, and I think crude oil is going to play a little bit more of a role for me moving forward. Um, yeah, definitely. I'm, yeah, I've been enjoying. I haven't done a lot on crude oil, but what I have done has been pretty decent so far. ESNQ, choppy, choppy, choppy. Don't like it. And like Becky in her mindset session, but Becky, we were talking last Thursday and we were talking on Monday as well. And both of us were like, we're not forcing the action. If it's there, we're going to take it, but we're not going to force the action. We're not just going to force the action because there's a camera on and we're supposed to talk. If there's a trade, let's have a conversation on it. If there's not, let's have a conversation on something else. But in my estimation, the index is like garbage right now. I like the commodity side more. That's yeah. Listen, if your coaches are going to force bad trades just because it's you're in a stream, like that will just teach bad habits to everybody else. Like it's a terrible mindset to force bad trades. So yeah, I'm with you. It's a healthy mindset to not manufacture bad trades. I was talking to one of my students literally last night during the Asian Open session, and we were making that short on the Nasdaq after the Micron pump. The one it's not the same on the ES, but you can kind of see it here on the ES when it violated this support level and you start seeing it sell off. Or no, it was this one here. Let me actually go to the NQ. The ES looking so different. It's this one right here. So right here, when after the Micron pump, we caught that short underneath this level here. And we were talking about it. And I said, listen, if you want to make a trade as a day trader, you can always find a trade every single time. How many of you agree with that, by the way? If you have a desire to make a trade as a day trader, you can always convince yourself there's a trade out there. You can always find it. You can always flip time frames. You can always flip to the philosophy. You can always go down to the 1 minute time frame. You can always find a trade. But is there a trade on your time frame that you trade, that you have commonality with, that you understand? And not every environment's a great trading environment. And so I think it's a very healthy mindset to be like, I'm taking A setups. And if those A setups are there, let's drill them. And if those A setups aren't there, because we're in a choppy soup of price action, then be a little bit patient. One of my mentors told me one time, and I think he took it from a book, but he said, some of the best trades you'll ever make are the ones you don't take. By the way, crude has pulled back to the 9 EMA. Something to keep an eye on. That trend line right here. That's the current trend. That breakout was the trade. That's the current trend. Real important zone right here that crude is testing. Going back down. Testing that 9 EMA combo trend line. Hold that firm. You're good. Come back down to under. Not so good. 15-minute time frame suggests overextension, pullback. By the way, this is why I love the 15-minute time frame. Pattern recognition, consolidation, breakout, overextended, pullback. A 5-minute, that's definitely going to stop me out. And I'm stopped out on crude oil. Okay. All right. Now we're flat, guys. I'm a big fan of the 15-minute time frame, and Mike might use it slightly different than me, but we all kind of use it from a trending and a pattern perspective. And what I've said, if you want to catch it like a real trend, managing off the 15-minute time frame is a good way to set through a pullback on the 5-minute time frame, because I can get convinced to get in and get out on the 5-minute quite a bit. And sometimes I feel like I have mishits because of the 5-minute read goes against the 15-minute read. But where the best setups occur, in my opinion, are at 15-minute time frames. Like, you have a level, you have an opinion on, and you have a consolidation base on a 15-minute time frame, and then you break out. Those are beautiful breakouts. Well, that's the thing. Like, and I was talking to my student last night because he's a relatively new student to day trading, and I was talking to him about what his time frames are. And I was like, all right, let's go the 1-minute time frame. And we went to the 1-minute time frame. And I said, okay, how many trades can you potentially spot on this 1-minute time frame? And we were looking at yesterday's price action. And as he was looking at it, he stopped counting because there were so many different trades you could have made. I said, so if you're going to trade the 1-minute time frame, you're going to make a ton of trades. You're constantly getting in and out. You're basically just scalping level to level to level, and you're carrying no trend, because you get too many data points to be able to carry against that trend. Whereas when you come out to a little bit of a longer time frame, 5-minute chart, you're going to see less data. And as you see less data, you see less levels. As you see less levels, you see less trades. So less trades, a higher quality of trades. When you come into the 15-minute time frame, same concept. Less levels, less trades, but higher quality trades. And that's how it works throughout every single time frame. And so if you're trading the 1-minute time frame, you are going to make a lot of trades. And oftentimes you're gonna be hitting between 45 and 55% of those trades. If you are trading a 15 to a 30 to an hourly time frame, your batting average is going to go up, your reward to risk ratio is going to go up, but you will take less trades. And you get more structure on those time frames too. So I'm a 15-minute, like, I'm a true believer in the 15-minute time frame. I'm a true believer in the hourly time frame. I'm a true believer in the daily and the weekly time frame. Like, those time frames are chiefly important to me. Doesn't mean I won't use a 4-hour time frame. Obviously, I like to execute on the 5-minute time frame, but the 15, the hour, the weekly, the 15, the hourly, the daily, and the weekly, those are epicenter catalyst time frames for me. Like, that's how I see the environment on those time frames. All right, crude oil is going to take a second to reassess. Go back to the EE. Let's go GC here. GC still neutral, nothing. ES. ES is 5 points away from that 74.10 level. That could be an interesting trade setup in the next 5 minutes, 10 minutes, but it better hurry. We only got 15 minutes before imbalances come out, obviously. And that's another thing. As you get closer to the end of the trading session, obviously you tighten things up. You don't have time frame to structure on longer horizon time frames. So everything gets tightened up as you come into the close. But yeah, Justin, I think all of us really like the 15-minute time frame. Like I said, every day trader is going to be unique a little bit. Some people prefer 1, 2, 5. Some people prefer 10, 30 hourly. But I think everybody has a positive opinion of the 15-minute time frame.
Agreed. I love the 15.
And what does the 15-minute time frame tell us right now? Tells us to do nothing. That's what it tells us right now. Wide range neutrality on gold in the middle of the zone tells us to do absolutely not one thing. You should not have an opinion yet. When you're looking at the 15-minute time frame on the ES, just again tells us where the level is. That same level, 74.10. Got to wait on that development there.
Hey, I am late. How's it going? I can't hear. I don't know if
Wait a
Matt can
second.
hear me.
Is that Becky?
Yeah. Hey, what's up?
I have it on mute.
Better late than never. I know. Kids overrunning me this summer.
Are you there, Becky?
I'm here. Yeah.
Oh, I
I
had
can
to
hear
I
you.
had to have it on mute. I didn't see you. I've just been so enthralled with the absolute nothing of Power Hour so far.
I liked it. I liked it. It was good. Oh yeah, I'd like conversation around like waiting for your best setups and watching the other time frames and other markets and seeing what you can see.
Well, when you have nothing to talk about because the price is boring you, you find other things to talk about. And that's often when you can talk about things that are very important to you, like finding better structure. If you don't like the current environment, there's a problem with it. It's dirty, it's filthy, there's not a trade setup. So what do you need to see to get the confidence back? Um, you work to the extension levels and you give me a pattern, and that's where I come back in.
Yeah. Makes a lot of sense. Yeah, we slipped down here, but like we're all inside. I mean, it's wild because we're inside the first 30-minute range of the day on both ES and NQ. And that's what we talked about earlier too, is like it could just like dink around in here on the inside. And so fading the extremes like worked a little bit, but now it's like right around flip-flopping around VWAP is not the best setup.
To be fair, every single data point the market has had today is inside the first 30-minute candle.
Exactly.
Every single data point
Yeah.
today is inside that first 30-minute candle.
Wild.
Yeah.
Mhm.
When's the last time we saw that?
Been a while.
I'm trying to think. Yeah, it's been a while.
That 30-minute candle was insane, though.
It was crazy. It was crazy.
We were on with Mike. I think I got in and out 2 or 3 times depending on which chart I was on, but it was just sinking like crazy. It was just liquidating like that hellfires were
Mhm.
chasing it. It was wild.
Which was kind of crazy given the fact that Micron and the economic news today was not negative.
Yeah.
Like, it was kinda crazy.
Yeah,
Like,
there was
don't get me wrong, I get the Apple news was a little bit of a negative catalyst, but Apple increasing prices is not the causation for a 3% move in the Nasdaq on the cash open. You know what I
yeah.
mean? It's gotta be something more than that, so
I felt like I felt like the market was like, "Oh, you like that micron news, that fundamental news? Hold my beer." Like,
mhm,
that's what I was
mhm.
thinking this morning. It's like,
Well, and I did, in
that
fact,
was
like the Micron news. Like, Micron
oh,
had a wonderful, wonderful earnings report.
that was wild. Were you watching it when we got off yesterday? We got off and it
Uh,
just
it skyrocketed.
yeah,
Yeah,
everything.
skyrocketed. I actually counter trended it last night during the Asian session.
What?
Caught a decent trade to the downside, but
Nice.
yeah, it was crazy.
Yeah,
Again,
that
it came out of nowhere. Like, I saw the move on the Nasdaq, and then I'm like, "Oh, yeah,
mm,
that
I know
had
what
to
you're
be
doing.
Micron." Like, the very second I saw the move on the Nasdaq, because I was in front of the market at the moment,
Mhm.
and I was like, "Oh my goodness, Micron had to impress." And they did. They
Yeah,
did. They had a great report.
boss. It was even more pronounced than even, like, some of the other biggies, like NVIDIA and stuff. I mean, that was a powerful move.
Um,
Powerhouse.
there's only 2 other reports in the previous earnings season I can say even came close to them.
Okay.
HPE, they
Mhm.
Hewlett Packard had a ridiculous report. It was very similar to what the Micron was. Uh, HPE had a 40-40-40 report, 40% beat on EPS, 40% increase in guidance, and a 40% increase in revenue year over year. Unheard of, by the way. The 40-40 club I had to make up because
I love it.
companies don't do it. You know
No,
what I mean?
rare.
It's the 40-40-40 club. There was obviously a lot of great AI names in last earnings season. Datadog was another one that was really, really, really good.
Mhm.
Um, but even when you go to NVIDIA, like, NVIDIA's reports don't fool anybody anymore because everybody now knows exactly what NVIDIA does, and
Yeah,
so it's an all eyes moment, and because it's an all eyes moment, expectations are pretty set. Like, you're not NVIDIA's not coming out in a corner and saying, "We just increased 15% guidance." Like,
right.
it cannot do that. They're too big, they're too followed. Everybody has a really deep understanding of their earnings environment, and so NVIDIA is not fooling anybody. NVIDIA is not fooling the one-year-old boy that I watched, like, it's not fooling anybody. Whereas the only way I would describe Micron's report last night was it was an NVIDIA light report when we were first starting the AI trade, when
Mm,
NVIDIA was shocking everybody with the elevated guidance, elevated revenue handles, elevated expectation. That's the only thing I can
yeah,
even go back to because 345% revenue increase on a $41 billion revenue company is kind of unheard of.
yeah, it's wild. I wonder if you think maybe that why NVIDIA doesn't have this crazy pumps like we saw yesterday as consistently, or I guess as I don't know, whatever. But like, are they more front ran? Is what I'm wondering. Is because like people know and expect it,
So
like you're saying, and so there's more front
everybody's
running.
already in NVIDIA,
Yeah,
like everybody is.
exactly.
NVIDIA's Everybody's been in NVIDIA for years now, not months.
Right.
And so NVIDIA is extremely crowded, and that's why you're seeing
Profit.
other semiconductors now be more overvalued than NVIDIA. You wanna know the craziest part?
Mhm.
Every semiconductor company that you can name has a higher PE ratio and a higher PEG ratio than the king of AI, NVIDIA. Every single one. NVIDIA has NVIDIA is cheap valuation. I know it's crazy to think about it. NVIDIA is on discount right now. If you wanted to buy NVIDIA as a long-term investor, you're on a red tag sale right now. That's crazy to think about.
Yeah.
Like, if you were to tell me I'm going to buy AMD in front of NVIDIA, I'd be like, as a trader, I get it. As an investor, I'm like, are you kidding me? Like, are you serious?
Mhm.
NVIDIA has a 29 PE ratio, a 16 forward, and a point 0.3 PEG ratio. AMD has a 160 PE ratio. That's like saying I'm going to live to 200 years old to finally pay off my AMD investment. Like, that's what a PE ratio states. The amount of years it's going to take in the future based on the average expectation of earnings currently to pay off the investment. That's what PE ratio states. And so when Warren Buffett comes out and says, listen, you should buy a PE ratio as close to 20 as possible, and AMD has a 160 PE ratio, and people are like, hey, that's kind of close to 20. Let's go. No, it isn't. NVIDIA at 29 is. And
Yeah.
so, like, yeah, NVIDIA is just downright cheap in comparison, in my opinion. Broadcom's had a couple good reports. Absolutely. In fact, Broadcom had news today in terms of increasing revenue expectations for next quarter. But I'm very powerful catalyst right now in the market, in my opinion.
Amazing.
Like, there's not a chance in the world I'll ever put them above Google, NVIDIA, and Taiwan Semiconductor in the AI landscape. The max they can get is the 4th position because the other companies are just too important on different avenues of the AI infrastructure build out. But
Mhm.
they're the only vertical in the top 5, and they are a juggernaut in that vertical.
Oof. Netflix.
Um,
Right,
that's
love
one I
her.
got wrong this year, Jaja. For example, I maintain a couple different watch lists, but one of my longer term watch lists called the T25, and I put Netflix on that one for the first time this year, anticipating post split, little bit of love coming in. Nah, I was wrong on Netflix. I was right on Corning though. GLW, baby. I love that company.
Mhm. Well,
Yeah, John, it's
you just need
testing the 440 level here on gold. Oh, 42 level. There is a short underneath that level, by the way, to fade against to VWAP.
yeah, sinking back down a little bit here.
And if we had more time in the day, I finally do like the level on the ES. It only took an hour and 47 minutes of straight content, Becky, to actually like a level on the ES.
To have it slide back into an area of interest.
Yeah, and it just so happened to have 19 wicks with it as well. It's ridiculous.
It's more wick than body.
It is more wick than body, which
But
means
it
you
is
have
back
more
down in
volatility than momentum.
yeah.
It wants to test underneath, though.
Yeah, she's pushing down and she's almost down below that wick from a little bit ago, from an what, hour and a half ago. Where is that? 474.08. 408.5 is the low of the pivot. Could take that out. NQ is holding up a little bit stronger, just dancing around VWAP.
Paint me very, very unenthusiastic about it.
Yeah, yeah. I had a solid morning, so I'm like, let's see what she's doing here. It did really feel when I was peeking at it in between sessions here, it was not doing anything. It wasn't really breaking. I have alerts set on the extremes and they have not triggered. Jogger.
No, the morning session had volatility, had levels, had bounces. I mean, you do a lot with that environment.
Mhm.
It's just been a fade inside range. Like,
Yeah. Let's see what she does here as a little, see if we get a little power anything at the end here. Maybe a little pop or a little sink below that pivot, but
well, I think the price has bored people to death, so I doubt they'll catch it.
yeah, I don't think there's a lot of money in the market. Like I think you mentioned this earlier too. I mean, when there's momentum and it's moving and we're like that's a trend that you can catch or we're seeing levels like with a strong reaction at them, that's different. That shows that there's volume, there's interest, there's moving, there's liquidity. And that doesn't really seem to be the day that we're having this afternoon because it's just drifting.
No, this is the imbalance candle, by the way.
Oh, we're there.
Yeah.
Yeah.
It's gonna test. It's gonna test.
Well, there's definitely the Bears owned the morning, that's for darn sure. And
We're
it
gonna
couldn't
do
have
it.
been out of it.
We're doing on board.
Yeah. Do it, sink it.
By the way, we ain't trusting nothing here.
No.
You break, you run, or you die. That's it.
Do it. Show us something good. Jesus dancing. Even this imbalance candle's got just wicks on either end.
See, got stopped out. I'm dead. I'm done. By the way, I knew that was gonna happen.
There's buyers here and sellers are fighting. There's this.
The gold's a good move though, if you're shorting it.
Yeah, that one is thinking a little more aggressively. It just took out the low on the last pivot. Nicely there. Took out 39.
Honestly, the lower we go going into the Asian session, I'll be happy. Like you come close to VWAP and given W formation down there going into the Asian session, I will love that.
Hey, yeah, that could be a nice pop stone.
Especially after a little bit of a bull move today for the first time in a while.
Yeah, got a little momentum under her.
Right down here, just kind of hang out.
Yes,
VWAP will reset, but
oh, Caviar, our guy. Thanks, man. It's dancing here. I could see imbalance as being slightly bullish, honestly, because they couldn't take out the low, and it's
no, they probably
got
picked out.
Yeah, the look of it is showing there's trying to be a bullish push, maybe pop back up at the end here because it hasn't been able to break for what, an hour now. Been within range. I'm so curious what tomorrow will do after this big sell off at open today and then fizzled out. I wonder how we'll close the week. What's the weekly candle looking like? Oh, I feel like I gotta look. I'm getting close to the end of the week.
Weekly candle wants to test lower.
Woo! She a real big bear.
That's double top, double bottom. Wants to roll over.
That definitely is bearish on it.
Bulls need help.
Yeah. Oh man, tomorrow could make a play in it.
If we start correcting here on the ES and the NQ, guys, those are pretty good bearish environments on the day trader side of the equation. That's where the perma bears get their moment to shine.
I'm in it to win it for a minute.
That's it, because that's what you get. You get a couple minutes. No,
I'll take it.
Corrections can be really, really fun to trade, actually.
Yeah.
As a day trader.
Well, if you look at it weekly, I mean, if this closes bearish tomorrow, we could easily the week or two after take out the low of 2 weeks prior, the 2 week prior low on these. 72.30 on ES. Very interesting. We'll see though. I mean, the week's not finished yet. We've got 20% of the week still, and that can make a big impact. I mean, if it runs tomorrow, then it's going to be less of a smooth pattern on the large time frame anyway. And daily, you know, we could see what she does, but daily also is looking bearish. If this day closes down low here in the bears, we could see a little more of a push down tomorrow for continuation as well. Although today didn't get as low as yesterday, right? We made a lower high or a higher low technically on the wick of today.
Yeah.
No, ES went
Weekly
lower and
the
Q did
weekly
not.
chart doesn't care about that, but intraday it does. That weekly chart is a nasty rollover that needs help.
It's nasty looking.
Mhm.
Yeah, mhm. 'Cause yesterday tried to hold up, but we saw bear, bullish try, and now bear again, so
Well, comms and discretionary have been rotating into cyclical for 2.5, 3 weeks. Tech started rotating into cyclical yesterday and the day before. Now we're starting to see M formations on the weekly time frames on the ES. NASDAQ looks like a shifting volatility situation at the top end of the chart. All of those lead to correction analysis and deeper pullback analysis on the AI trade, which is what the ES and NQ reflect is the AI trade.
yeah, it's so heavily weighted within them. Well, we're gonna end kinda, neutral in the middays range, honestly, with this little push up we're getting in terms of New York session anyway.
Yeah.
I mean, like, on the daily. We'll see. I like on the weekend, like, thinking about the larger time frames and what the patterns are on, monthly if it's towards the end of the month and then on down, which honestly we are towards the end of the month because after tomorrow, what is there, like, 1 or 2 days left of June?
June ends next Tuesday, so 3
Yeah.
days.
Yeah, okay, so we're getting close to a monthly candle,
That'll be the end of the month, end of the quarterly candle, end of every time frame.
yeah, that's gonna
Tuesday.
be wee.
Oh, no, the levels are solid. The cleanest level in the entire market is the 40-60 level on gold. Like, the levels are solid. Um, and Judge, I will entertain a bullish reversal if we work down to the lower levels around 40-20. 40-20, even all the way down to, like, 40-05, I'll entertain bullish reversals down there, or you recover and get back up into the 40-60 levels. So it's either one, recover, get to the 40-60 level, or two, work down lower and give us a reversal. Either way, I'm looking at gold tonight. I get excitable, Becky, on the first day of a dollar after a dollar pump.
I like
Like,
it.
as it starts to turn over, like, finally, I don't have to deal with gold getting kicked in the face every second.
Get off it, dollar. Stop. I'm down
Yeah.
for that. Gold has been setting up for a while, so if we could actually get some momentum under her, that would be
Mhm.
amazing.
She's ready for a reversal on the
Yeah.
daily chart.
I think a lot of eyes are on there too. Like, the commodities are getting more attention. I correct me if I'm wrong, but this last pump, the end of last year, like, there's a lot
Um,
more eyes on gold.
I am personally far more interested in trading gold and crude oil right now than the ES and the NQ.
Mhm.
Far more. It's not even close.
We got a lot of options as traders. A lot of
Mhm.
skills cross over if you just, spend a little time studying the different options out there.
The trend is trend is trend, patterns are patterns, support is support.
Yeah.
Big values are different. That's about it.
Use your skills and track different things and ask questions. Like, there's so much opportunity out there. Like, that's the abundance mindset, right? Like, if you don't like what one is doing, like, look around, see if you can find something else that's got some good liquidity, such as gold and crude, like options.
Well, we got about a minute left in the session here. We're dancing here. Becky, thank you so much for joining me at the end of Power Hour. I know you had some time off with the at the park with the kiddos. So glad you got back for the conclusion on Power Hour. You got a couple thoughts for the team as we kind of conclude today's Power Hour?
I just appreciate hanging out with you guys. I think it's fun to see what everything is doing, talk about the different options and timeframes and setup and patience. And so I'm very grateful to be a part of this team, and I appreciate you always, Matt. And I hope everyone can have a nice, relaxing weekend if they trade or not tomorrow. Just cheers to everyone and having that good period of reset in between trading sessions.
Yeah, team, have a wonderful, wonderful rest of your night. Thank you so much for hanging out with us this week in Power Hour. Usually, Becky and I don't do Power Hour on Friday, as neither one of us do a lot of active trading on Friday. But hopefully everybody's doing fantastic. And Change, welcome to Blue Sky. Very
Hi.
happy that you're enjoying it so far. We love to have awesome conversations with our community. We love to, talk markets, talk shop, and bring an education flair to the environment as well. We love to teach, and that's what coaches do. So I'm glad you're here. Hit that subscribe, and welcome to Blue Sky, my friend. Outside of that, have a wonderful rest of your day, team.